Welcome back, and this is the latest in your business this hour. January residential building statistics have shown a sharp year-on-year decline in new planning activity as rising interest rates as well as recessionary economic conditions persist. Consumers are also finding themselves having to downsize or sell their properties to remain afloat. FNB's John Loos joins me now to unpack this further. Thank you very much, as always, for joining us, John. Let's start with the trends that we saw in January when it comes into the residential property space and the kind of trajectory that you're seeing at the moment.
Yeah, January, I smooth it. I use a 3-month average just to smooth what monthly figures can be volatile, but nevertheless, it shows the declining picture for the 3 months to January year on year. So compared to the 3 months a year ago, the corresponding 3 months, plans passed, completions, 30% down. And plans passed, which is normally a leading indicator of what's to come in completions with time, 41% year-on-year down. So that's quite a sharp drop. It's not unheard of. These numbers are highly cyclical. They are highly sensitive to interest rates and economic growth fluctuations. And we do know that there's quite a few economic headwinds that have been brewing, including quite significant interest rate hikes. So it's not surprising, but it does point towards a slower year 2023 compared to 2022.
Yeah, I mean, you say it's cyclical, but we have seen that the Reserve Bank, along with other central banks across the world, have gone on an aggressive interest rate hiking cycle, and they may not increase beyond the end of 2023, but interest rates are likely to remain high. So the short-term to medium-term outlook, if you will, when it comes to the residential property market and the appetite thereof.
Yeah, no. I mean, we think that the last interest rate hike is coming next week at 25 basis points up, and then after that, the SARB will probably move sideways for the rest of the year. But nevertheless, the full impact on
owners and households here now, John, is the fact that many of those who do own property are struggling. There are municipal rates and levies and all sorts of costs to maintain the home. And many people, as we've reported over the last while, are finding themselves in a situation where they are no longer able to afford those homes. Have you found that more homeowners are downsizing or having to opt to sell their homes just because not only the home is more expensive, but the upkeep as well?
Well, that number of of people downscaling due to financial pressure, according to the estate agent surveys, is always significant. I seem to remember the latest figure around about 18%. It's not the highest it's been, but that is, there's always a significant portion of total sellers selling to downscale due to financial pressure. They've overcommitted in some way, bought a house that's too big, often realized later that the costs involved with running a house can be quite significant too. What we haven't found yet is a big increase in bad debts at home loans divisions in general. If you look at the National Credit Regulator's data on non-performing loans, it's ticked up gradually in recent years, but it's nothing compared to the global financial crisis of 2008 and 9. It's still at relatively low levels, so it's not totally unhealthy, but I would expect, yes, that the financial pressure would increase, that the proactive downscaling of houses would increase, that bad debts would increase somewhat in the banking sector too, in the mortgage sector. So that's the reality with interest rate hiking, unfortunately. And yes, this long economic stagnation has gradually heightened the pressure on the entire economy, including the households. So, yeah, it's a squeeze. And then, of course, the rates and tariffs above inflation increases too. So, yeah, there's a lot of headwinds for the household sector at the moment and for the housing market in general.
Thank you very much for those insights, John. As always, that is FNB's John Loos joining us this evening to unpack the trends in the residential property market and some of the issues that persist. One of those, as you've just heard, being the interest rate hiking cycle that we've been going through.